Hi, this is Kerry Artak with Wicked Stocks bringing you your daily NVIDIA report for Friday, May 16th, 2025. Let's take a look at the charts. I will start with this one. I like to start with the big picture and work my way into the day itself. It was 3 weeks ago today that we settled above two meaningful channel structures. We settled above the rising 9-month channel bottom that we settled below about a month earlier at 112.74 this week. And of greater significance, I think, in terms of momentum reversal was the settlement above the 4-month descending channel top the very same week, 3 weeks ago. It is now well below the market at 108.25. But we still provide these numbers for you. Bottom line, it was the settlement 3 weeks ago above this area that indicated 153.13, a retest of that January high within 3 to 5 months. Now, the way things are playing out, it could be more like 3 to 5 weeks, but we are expecting it nonetheless. This week, for instance, Monday, we closed above this significant descending 2/3 speed line. That is a trend-defining line study in itself. I'd mentioned how the market may hesitate in the low 120s and fall back into the 110s within a full week of trade. Wasn't to be. This was obviously on the heels of the breakthrough in tariff discussions between the U.S. and China. And on the daily chart, you can see that same exact descending 2/3 speed line is 120.73. Having closed above it on Monday, anticipating 139.42 as a 1 to 2 week objective. We're about 4 days into it, and we may see 139.42 today. This rising 5-week channel top able to contain buying through next week, possibly into later June. From here, we could fall back into what is really right now the 110s. So, this rising line here, it represents, you got 139.42, you've got the descending 2/3 speed line. We can fall back to this low 120s, 120.73 descending 2/3 speed line within 2 to 3 weeks at the most of testing 139.42. So if you've been long for the last either A, 3 weeks, or either B, for the last 4 days above 120.73. This is your area, 3 to 5 day swing traders, 139.42 to at least take some profits. I would take all profits if you're a 3 to 5 day swing trader. Now, if you're a 2 to 3 week swing trader, anticipating the 153.13 area, we've mentioned how this rising channel top at 139.42 can certainly stall out a rally and, in fact, inspire near-term only bearish rotation back into the low 120s and dropping. In fact, that 120.73 speed line will be converging over the next 2 weeks with this newly formed rising channel bottom that is 110.36, and they all converge kind of in the 116, 117 area over the next 2 to 3 weeks. So really what I'm saying here, if you're selling 139.42, you can hold out over the next 2 to 3 weeks for kind of the mid to upper 110s. This descending 2/3 speed line is dropping and will converge over the next 2 weeks with the rising 110.36 channel bottom. This is a solid zone to then buy into longer term. I think you can sell 138.49. That is the wrong image. This is the right image. You can sell 139.42 on a 2 to 3 week basis, but you can buy the 120.73. Actually, it's this chart. You can buy this zone on a 2 to 3 month basis because it is a more significant support area, especially with respect to the descending 2/3 speed line on the weekly chart at 122.38. So I hope that that's all clear. Everybody has their own, time horizon that they like to trade. That is the wrong chart again. A 139.42 able to contain. This is a solid day trade level resistance. It's a solid 3 to 5 day swing trade level back to the downside. From 139.42, we can fall back to a 127.72, which is the 5/8 upside Fibonacci. So 3 to 5 day swing traders can sell 139.42, anticipating 127.72. 2 to 3 week swing traders can sell 139.42, anticipating bearish rotation back to 120.73, which will, over the next 2 weeks, continue dropping and converge with this newly formed rising channel bottom at 110.36. So this is more like a 117 objective. If you happen to sell not 138.49, but 139.42, that was yesterday's chart. That should not be there. Sorry about that. 139.42 can be sold, anticipating, I'm going to say it one last time, the upper 110s within 2 to 3 weeks. Now, if we close above 139.42, that is, after all, consistent with our longer-term anticipation of 153.13. And so if we do close above 139.42, if you went short here, at 139.42, my suggestion is to, at the very least, exit that short position. And yes, if we close above 139.42, anywhere from 3 to 5 day to 2 to 3 week swing traders can go long again, expecting 153.13. So 139.42 is a significant pivot point right now. Through the rest of May, we could top out here, fall back into the upper 110s within 2 to 3 weeks. And inversely, if we close above 139.42, expect 153.13 within 1 to 2 weeks. Where yes, we could double top for a spell. I see nothing significant, though, about 153.13. I think this is a triple top. Double tops are much more frequent than triple. There's a very real possibility that the very week we test 153.13, we also close above it. In fact, it is this rising channel top that I'm showing at 170.46 that I think could be our ultimate objective as we continue into the third and fourth quarters of this year. We have a meaningful buy signal above 112.74, 108 and a quarter, this convergence 3 weeks ago, a secondary buy signal that occurred Monday of this week when we closed above that speed line at 122.38, now 120.73 on the daily chart. So you put that all together, we can see continued gains into later year. We could see 170.46 within 3 to 5 months, but I didn't want to get carried away with that buy signal, merely anticipating a retest of 153.13. But if you really look at the charts, the double top is much more common than the triple top. I do think it is prone to violation on the way up. And 170.46 I think is kind of our new objective the more I look at this chart as we continue into a later year. Of course, a settlement above 153.13 over the next few weeks would likely yield 170.46 within another 3 to 5 weeks. And once again, 153.13 is likely over the next week or two with a settlement today above 139.42. Until then, you can play the near-term possible bearish rotation back into the 110s. Yes, we're bullish mid to longer term, and yes, this is a counter trend trade. In other words, selling 139.42 is within the confines of a longer term buy signal, but the markets, sometimes they go straight up, but for the most part, there's give and take. And what could happen here at 139.42 is bearish rotation back into the upper 110s before we rotate north again to 153.13 over the following 2 to 3 months. I hope that all made sense. This week at wickedstocks.com, we put out 2 stock picks, as we put out 2 stock picks every week. This week was EQT and Wingstop. You can see them both for free by going to wickedstocks.com and taking advantage of our 5-day free trial. You'll also see our daily triple Q, our daily SPY analysis, our weekly Apple stock analysis. So check out wickedstocks.com. Take advantage of that 5-day free trial. I will be back Sunday afternoon with Monday's NVIDIA report. You have a great weekend.